T. Nelly, longtime listener. What's up, T? Question. Given the macro market, will record deliveries in Q1 meaningfully move the stock price, or will it take major events like a Fed pivot and Cybertruck production? Love your thoughts. Thank you very much. Richard and then Hans. What do you guys think?
Yeah, I think it will support the stock price. I think Cybertruck will move the stock price.
I think one of the things that we kind of needed to support the stock price, we actually got this last week with all of the banking crisis, and that is liquidity being pumped into the system. The Fed can call it whatever they want, but they just reversed 2/3 of the quantitative tightening that it took them several months to do in the course of a week. So as long as the money printer goes back to Burr, then there's a lot of upside potential for equities from that standpoint. There's also a lot of risk right now in the system for risk assets, which Tesla is one of. So, it's hard to say how that will play out, but we at least have one tailwind at the back right now.
The most interesting thing about the whole QT thing, real quick, the quantitative easing, or like the thing that the Fed did to rescue the banks. The one argument I'm hearing is that, well, it's not QE, it's repossessing of assets. I'm like, bro, there's more money in the system. Who cares? Like, that's just what it is. Why are we overcomplicating this? This is why we're here in the first place. We're overcomplicating shit that shouldn't be overcomplicated. It's just so simple. More money out, more inflation. Easy. More money out. More chances.
Yeah, more money to the banks means it's more money out into the public stream. Also.
Exactly. It's so weird. It's like technicalities. It blows my mind.
I think it gets caught up in terms of like the government bailout versus how it's done, because I don't think they want to call it a bailout. And theoretically, it's raising money from all the financial institutions. I think ultimately, if the institution fails, it's a bailout.
Exactly. 100%. Couldn't agree more. As far as this comment goes, I'm going to say something very controversial. I think buybacks will be the biggest signal that Tesla's liquidity and its financial positioning is the strongest in the market. And I think if they buy back, I think that's a bigger signal than any deliveries they do. Because that signals that their cash position is perfect. They'll never need to take a loan. Their cash flows are good, especially in a tight environment. What do you guys think about that?
I have one question. If you had to pick between Tesla pursuing captive financing or doing buybacks,
captive financing, 100%. Yeah, but to me, the signal of the buyback is more important than the net effect of the buyback is what I'm saying. The signal is sent to the market.
Mm-hmm.
I was going to say is Elon's been pretty conservative in terms of his economic forecast and his commentary on Powell, and he believes that it's been destructive, etc. So if he really believes that, it would be hard for me to also believe that he'd be quick to get rid of cash.
But that's what I'm saying. That's if he were to do that, imagine the signal that sends.
No, yeah, and I'm saying that it would be difficult if that was his concern for him to get to that point where he'd actually be willing to get rid of the cash.
Understood. Great question, Tinelli. Not financial advice, by the way. We don't know what we're talking about. Just three morons. Actually, one moron and two really smart people. I shouldn't be calling. What am I doing? Come on.
I definitely qualify in the moron camp.
You were correct with your three morons.
Two morons and a lawyer. So I don't know which one's worse. Just kidding. Next
Four
one.
morons.
Media Cafe Online LLC. Thank you so much for a question. Community member because of the little symbol. Question. Without a strong GM, Ford, VW, and or Toyota, how will ICE cars be replaced in any reasonable amount of time? 2035? That's a great question. How do you guys think about this?
I think if we lack supply, it may be even longer than 2035 because we get back to that. We repeatedly go back to that chart and that dead zone if there's not enough production, and we talk about it and we see the legacy being inept. And I think it's still in play. And as long as they're inept, the longer that date gets dragged out.
I just want to make a comment. Every time you lean like to the side, you always look like Phantom of the Opera because it's only half of your. I just wanted to make a comment. Just there you go. Much better. Thank you. Go ahead, Hans.
Yeah, I think that just like a lot of the other areas of the economy right now, when they get in trouble, we see some sort of government intervention. That's going to be something that is undoubtedly on the table for these companies, GM, Ford, VW, Toyota, they employ too many people. They're too politically connected. The UAW is too large of a player for all of these companies not to get some assistance. And so they may not be strong, but with the support of global taxpayers, something will work.
Yeah. And I think
the question is what?
Sorry, I didn't mean to interrupt.
I was going to say, the question is exactly how does that play out?
Also, the question is, what happens if there's a different administration? I mean, is a Republican administration as likely to assist the unions? Probably not.
That's a fascinating question. The 2024 election is going to have some repercussions to this for sure, 100%. I think it's going to take forever to replace gas cars. So I think we're talking more about 100% EV sold each year. It might be 2035. I mean, theoretically, the quicker the ICE car makers go away, the faster we'll get to full EVs sold each year, but it'll be 30 million versus 100 million, right? Which means that then the fleet's going to take forever to be replaced. So 2035 could be the earliest that 100% of the cars sold, or as close to 100% of the cars sold, are EVs. Let's say mainstream cars, like Ferrari, I think will always make a gas car, and they should because they're beautiful, right? So whatever. But yeah, I think the bigger question is which car companies will take larger market share because of GM, Ford, VWs, and Toyota's inability to shift to EVs quick enough. Mm-hmm. And those are the real winners. The fleet will suffer because of it, but from an individual company perspective, those companies are the winners.
I was also wondering if, at some point in time, as we get more penetration and oil becomes less of a valuable commodity, I wonder if the oil companies, just like the Saudis did, are the oil companies going to start investing in this technology or related technology, and that will be the ultimate boost, the capital that comes from there that pushes the technology forward?
That's a great point. Yeah, because all the financial, I guess, incentives will be in place. It becomes an economic no-brainer for these guys to get into the play, basically. Go ahead, Hans.
The other interesting investment play is, if there really continues to be an affordability crisis in the car market and we see used car prices at elevated rates for a long time and we don't see enough new car sales, then I think that's a huge tailwind to mechanic shops, transmission shops, tier 1 and tier 2 auto suppliers selling replacement parts. That, it could be that the overall market looks more like a Cuba situation where we've just got to do what we can to continue to maintain older vehicles at higher levels for longer. And then, if the used car prices are at elevated levels, it makes a lot more sense to spend more money on those repairs and refurbishments. And so we could see a transition in the overall market to who's making money off of cars and car parts.
Yeah, at some point in time, I would think that oil prices would significantly increase because there'll be some period of time where demand's just going to drop off the table and people are going to stop producing. And the supplies will be more limited. And it'll be interesting to see because that's going to supply those used cars and it'll make the cost of use higher. But for some people to get in, they can only go into a used car. Obviously, that's a place also Tesla might be able to exploit with either their own used cars or with the lower end vehicles.
Mm-hmm. And I did want to just, if we end up in a situation like that, that's really bad for developing nations that, they're getting the vehicles that they have from the used market in the developed world. And so just, it represents a massive reduction overall in the amount of cars available in the market, which is going to have a disproportionately negative effect on the poorest of the poor.
Also, realistically, I bet you there'll be some other companies that do come out of the woodwork that don't exist now, that we've never heard of, that will be viable, that will do a good job, make money, provide supply.
Specifically Chinese companies that are yes, right now there is going to be a contraction in the Chinese market, but if they can start exporting globally because there's a shortage elsewhere, just because a Chinese company can't be competitive against Chinese competitors in the Chinese market, that doesn't mean they can't outcompete other automakers from other countries in a global market.
Also, we have to look at it in the big picture. That might be the means by which the United States and China have a way of kind of resolving their differences. if the Chinese need the international market, just like the United States needs the international market, then they have to play nice with each other. So maybe there is a détente that will arise out of that necessity.
You just use a French word on us, détente. What does that mean?
Let's say they will reach some type of agreement,
Mm,
not to fight, not to argue,
like a truce.
a truce, not a full resolution where everybody goes out and celebrates and everybody's happy.
Gotcha.
But it would be a better position, obviously, than we are in now.
Got it. I like détente better. Next question.